Trade policies and politics, as Richard mentioned, likely to continue to factor on Wall Street this week. Todd Horwitz is chief strategist at Bubba Trading.com. He joins us live from Chicago, and of course Richard here with us to join in on the interview as well. So, we were just talking about sort of that honeymoon period that we've seen over the last week or so. It seems like it's sort of starting to calm down. Investors perhaps kind of gauging reality here and waiting for the Trump picks to essentially the cabinet to fill out here. What's the expectation? What's the market setting up like for the week?
Good morning, Akiko. I think, first of all, I think what we really saw was a short covering rally because everybody got so short when they thought that Trump was going to win that they had to come back and cover because a lot of the big banks, a lot of people were short going into this. I think what you really have here is a market and an economy that are going in opposite directions. And I think the economy, I don't see any growth in the economy. I don't see jobs that are any good. I see a lot more problems coming. I see a lot of central bank manipulation. But what's happened is if you've been watching, the bond markets have taken over and basically told the Federal Reserve that we're going to raise rates whether you want to or not because we've now got the 10-year at 2.3 and the 30 pushed back over 3%. So other than maybe the Santa Claus rally, I think the markets are in for a rough ride coming in, especially when the Fed actually officially raises rates in December, I think December 14th or 13th.
Richard, you want to join?
Look, one question is around inflation, I think. I mean, what do you see there? And if we are seeing a bit of a rise in inflation, do you think, companies will benefit from that through a bit of earnings growth, or in fact, is it going to squeeze them on the cost side?
I don't really see inflation in the way that they're looking at it. I've never seen us not have inflation, and unfortunately, we don't count the things that we use every day. I do see people making less money and paying more for goods and services, so that's an inflationary time. Whether they want to declare real inflation, that's always the economist way of looking at things. But if you're actually in the economy and you're buying something, you're paying more for goods, and most people are making less money because of the lousy jobs that they're getting. So what we really have is a failure to communicate with everybody. The jobs market stinks, and the inflation and prices keep going higher in the things that we use every single day, but they choose to take those out of the equation when they talk about inflation. So I see much bigger problems, and I think that when they look back in history this time and when this bubble pops, they're going to say, oh, well, maybe we did have some inflation there.
Todd, inflationary pressure is certainly likely to increase here with the talk of this massive infrastructure spending under a Trump administration, as well as big tax cuts. Looks like the market is certainly priced in that hike from the Fed, the rate hike in December. What are you expecting here in terms of the timeline for further hikes? Are we likely to see that speed up again? And what is the expectation in the market right now?
Well, the market's expecting at least 2 rate hikes in this one plus 2 next year, and I think we might get more. And the truth of the matter is that other than the rest of the globe, if we raise rates here, it makes it better for business and it makes it better for everything. Because if you need the banks to free up liquidity to lend money to the average guy so you can create new business and you can create more jobs. Because without that, we end up with a lot of companies that don't want to hire. So if we get the free market system working again and we actually get the Fed out of the way, because really all the Federal Reserve is a legalized Ponzi scheme. So if we can get them out and get rates going higher, banks will free up money, they'll lend money out, consumers will borrow it, and they will buy more things. But right now you have the middle class, what's left of it, in a gridlock because they've never left the recessionary times that they keep saying that we're out of.
Okay, we'll have to leave it there. Todd Horwitz there joining us from Bubba Trading.com.